This is a weekly market outlook from ARM Capital. My name is Michael. Let's jump right in here, guys. We had a pretty bloody week this week with both the S&P 500 and the Dow Jones down almost 4%, 3.66 and 3.8 respectively. Now they are both negative for the year, while the QQQ is still slightly holding on. This is pretty much what we expected going in from last week. The trade war negotiations over the weekend were a lot of hype in the market. Futures were up big on Sunday. Monday morning opened up, and we covered our SPY calls we had at that point. I think it was at like 273, and we since then, Monday, Tuesday, Wednesday were just bloodbaths. All right, looking at the Dow, we're right down at the support we were seeing in late October. The 244, 245 range. We still have this little hiccup we got to close below. It's about 242 before we can fully be sure that we're going into a bear market. Moving over to the SPY QQQ, looks similar. You just see these massive handles down at the beginning of the week. And we're now back to our lows of late October, and QQQ has a little bit more support. Right now we're positioned, we have calls, 266 calls, and we're expecting a little bit of a bounce Monday, Tuesday. There hasn't been too much news over the weekend to facilitate it continue going down, but it always could. Our outlook is we'll have a midweek rally Monday, Tuesday, and it holds off the triple bottom in the SPY, and before we continue downward for the rest of the year is kind of our look as of right now. Other possibility, market just keeps dumping on Monday, blows out a bunch of stops, so people get margin called, we go to see our October lows, and we would prefer to see a VIX spike of around plus 30 to be able to confirm a bottom from the capitulation once that selling is ended. Right now we're hovering right around the 23 area, so we're still overall bearish. 20 is our line where we'll flip from bullish to bearish majority of our trades. We still think there's more downside, and we think we need to see a spike up into this 30 zone. Like back in February, you saw this ridiculous spike up to 50, but more realistically into the 35-40 zone to really shake everyone out that needs to be. Going on to some sectors, utilities has been the only one that's been positive in the past month, which is no real surprise. When the market's shaky, that's where a lot of people hide out. Everything else has pretty much been selling off. Materials is reaccelerating its sell-off because that was one of the worst trades going into October and November if you were on the long side, or with the best if you were on the short. Techs and financials were hit hardest this week, and we're going to take a look at some of these financial stocks as they are looking to break down even further. All right, bullish sector outlooks. Utilities, we just use the iShares as a base reference. We got a nice clean break above this 140 area. We probably will see a continuation in that just due to the market. Be uncertain if it's done selling or not yet. Some of the bearish sectors, energy, industrials just look terrible. If we break below this 35 level or this 135 level, we could take some puts on here, maybe a couple bear spreads. All right, that does it for the broad sector overlook. Let's flip on over to some stock picks.